To Market Faith once again today. Absolutely delighted to have you join me today on Market Faith. Always a joy, always a pleasure to bring you teachings and things that will help you in your business. All right. Today we want to, try and, I don't know whether to call it wrap up, right? But get towards the end of our teaching series on achieving financial freedom, right? And today we want to talk about a very, very important part, a very, very important component of achieving financial freedom, and that is multiplying money. All right, multiplying money. Listen to me. You don't become rich by what you save. You don't become financially free by what you save. You become financially free by what you invest. You are not free because of how much you've saved. You are free because of how much you've invested and how much you are returns, how much cash flow you are getting from how much you have invested. So multiplying money is about investing in the right kind of assets for you per time. It's about investing in the right kind of assets for you per time. All right, and we'll talk about that just in a few minutes and what you can do. Now let me also say this very clearly, very upfront, right? I will not tell you specifically exactly what to invest in. I will give you the classes and categories of things that you can invest in, right? To know exactly what to invest in, there are several factors you need to consider. You need to consider what's going on in your economy. You need to consider what's going on in the industry that you're trying to invest in. There's so many things to look at. All right, so it's not easy to just go ahead and say invest in agriculture, invest in gold, invest in crypto, right? Even though personally I don't have any investment in crypto, right? It doesn't mean you can't make money from crypto, but I don't understand it, so I don't do it, right? So we want to talk about investments. We want to talk about what you can do in that regard and in that area, and how you can grow your investments. And I want to give you just guiding principles and guiding tips that will help you in making investment decisions, because investment opportunities will always come around. It will always come around. In fact, the acronym POUR, right, is pass over opportunities repeatedly. Pass over opportunities repeatedly. So you are not poor because you don't have opportunities. You are poor because you are passing up on those opportunities all the time. Okay, so when we talk about investing and multiplying money, we're talking about how do you invest in assets that will yield the kind of results that you desire. Now remember earlier when we started teaching this series, we started talking about how much you want to make and what is your number. I don't know if you remember, but if you remember, one of the things that we did was that we looked at what number you are trying to achieve. So if you are trying to achieve a net worth of $1 million, because you know that 7 or 8% of that money is going to be coming back to you, right, as interest on an annual basis, right, and you can live off that interest, right, this is where those numbers begin to make sense. Right? So if, for example, your target is $1 million, you know that you can do 7% on your $1 million every year. That's $70,000, right? $70,000 for the average person is more than enough to take you through an entire year, right? So you have your principal, but your interest is also still there, bringing you money every single month or every single season. Okay? So the goal, when you save money, the goal is to invest. The goal of saving is not to save money. The goal of saving money is so that you can invest that money. You are not free by what you save. You are free by what you invest. All right. So one of the first things I want to say to you is this, right? Many of us will not have all the money we need to invest at once. What that means is that you need to take your time and gather up the money and save the money. My encouragement to you is that don't save the money in an account. Take that money, put it in a fixed income platform or security, whatever, and let them give you more money on it while you are waiting for that investment to get to a point where you can invest in something bigger. Let me give you an example. Let's assume you want to buy real estate. You want to buy a house. Let's assume, for the sake of conversation, the house costs $100,000, right? But every month you can save 10,000. What that means is that you will arrive at 100,000 by the time you have done 10 months. Okay, so what do you need to do? You need to take your 10,000 for month 1. Instead of putting it in the bank and wait until you get there, go to a financial house and tell them that, look, I'm going to give you this money and fix this money with you for 10 months. What interest rate are you going to give me? They're probably going to give you an interest rate that is not going to be too attractive, but it's going to be a lot better than what the banks can give you. When you do that, when the next month's money come, you can go back to them again and they'll give you another interest rate on that second month money, like that all the way until you get to where you are going. By the time it is the end of 10th month, right, you will find out you have 100,000 plus more, and that more representing the interest that you have accrued over the period on that money, right? But what you should not do is to take that 10,000 and keep it in the bank, because what will happen is there is a temptation to spend it. It is very high. Trust me, I know what I'm saying. The temptation to spend that money, it's immense. It's absolutely intense. So you need to put it in a place where you cannot see it. Where to access it will be very, very difficult. But what that means is that you have saved enough so that you can do much more in your own specific investment. So what I find is this, right? There are low risk, medium risk, and high risk investments. Low risk investments give you low returns. Medium risk investments give you medium returns. High risk investments give you high returns. Most people will make money more from the high risk investments. Most people will lose all their money in the high risk investments. You really need to know what you're doing, all right? But the reality is that for you to take advantage of the high yield, investments, you need to gather your money up until you can get there. That money will not, you don't have that money at once. So what you need to do is you need to save to get there so that you can gather the money and put it in the investment that you want to do. Okay, all right, that's the way it's going to work for most people. Okay, so I don't care whether it's 50,000, right? I mean, I don't like saying I don't care, because I actually do care. But it doesn't matter whether it's 50,000 naira or $100 or $300 or $100 or $500. It doesn't matter what it is. Put it aside and start saving the money. Don't worry about the interest that they are giving you with whoever you are keeping the money with. Your job is to make sure that that money isn't sitting down idle and gathering dust, for lack of a better word. All right, so it's very, very important, okay, that you understand that you save to invest. You don't just invest, you save over time, and then you invest in something. So how do you become successful at investing? That's what I want to talk about today. How do you become successful at investing? A couple of things that I want to ask you to consider. Number one, I want to encourage you to have rules and a thesis that you follow when it comes to investing. Listen, there are different ways to make money when it comes to investing. People make money in all sorts of ways. You need to find the one that works for you and stick with your thesis. For example, if your thesis is that oil and gas sector, right, is going to do well, or power is going to do well in Nigeria over the next 20 years, right? And you want to stick with that sector. You want to do a lot of research in that sector, right? Figure out where you want to make money, right? And try as much as possible to learn a lot about that sector where you want to make money. Now, there are some people, I have a friend who, what he does is he can invest in any sector whatsoever. He doesn't care. Right? As long as as long as the fundamentals of that sector make sense, right? And all of that. Now, although there are some things that even at that, he doesn't invest in. For example, I asked him the other day, why don't you do gold? He said, I don't understand it, right? So the point I'm trying to make to you is this: have an investment thesis. Your investment thesis has to be based on what you can understand. It doesn't mean you understand it today, but you can start investing in learning how to understand it tomorrow. For example, many people have gotten themselves burnt in forex trading. There are so many people that have gotten themselves burnt in forex trading because many people don't understand it. I started out trying to trade forex. I could not understand it. I stopped, right? So some people traded crypto and they are not in a good place right now, okay? So if you're trading crypto, you don't know how to put a stop loss, you don't know how to do all those things, then you don't know how to trade crypto, right? It's very, very, very important. Pick a thesis, right, and stick with it, because no matter your thesis, most likely you will make money. It's very unlikely that, there is almost no sector that is not making money. You just have to understand how money is made in that particular sector, okay? So have rules that you follow. Have an investment thesis that you follow, right? Number one rule, for example, is never invest in something that you don't understand, okay? First understand it, all right? And don't invest in whatever you don't understand. So somebody comes to you and says, oh, Agric is making money, right? I remember some guys came the other time and they said they were doing crowdfunding on agriculture. And I said, look, Agric is very difficult, especially in my market, right? So if you say that what you're investing in is agriculture, I'm very doubtful as to how you can make money, right? And 6 months down the line, everything went down the drain, right? Because the way things are, especially with agriculture in our country, is that many of the things are still not hedged. For example, recently in Nigeria, there was a flood that destroyed and wiped out maybe about, I think what I read in the news was about $100 million worth of Agric investments. Where do you even start from with that type of investment? Where do you go? All right. So I'm always very skeptical with agriculture, for example, in my environment, right? Because I don't know how many people have gotten it right yet. Almost every single person that I know that has done investment in agriculture has lost that money, right? It doesn't mean that people are not making money, because they understand the market. They understand how it works. They understand the right season, the wrong season. They understand it. Okay, so I'm very skeptical about things that I don't understand. So one of the rules that you can create in investing is don't invest in what you don't understand. Another rule that you can consider is never use good money to chase bad money. When you are losing money in an area, don't fall into the trap of somebody telling you that give me more money to bring out the money that has gone. No. I learned that from a seasoned banker in this country. Never use good money to chase bad money. It's a rule that some investors have. And no matter how bad it is, they'll just be looking at you. If you say, no, I need more money so that money can come out, they will not agree. Why? Because they've understood that you don't use good money to chase bad money, all right? So you have rules, right? And all of that. Then the next thing I want to ask you to consider, because again, I'm just giving you tips that will help you in making solid investment decisions, right? Is pick your asset classes. Pick your asset class. 2 or 3 asset classes that you want to invest in, right? There are about 4 asset classes, right? There's real estate, there's business, there are financial instruments, and there are commodities. Now, real estate is real estate, right? Over 60% of the world's wealthiest people have real estate investments. What that tells you is that real estate is a big way people are making money. And it's also a big way that people launder money, which is why financial authorities are always very, careful when people are trying to buy real estate, right? So real estate is is a fantastic way of making money, okay? Very, very important. Land, buildings, that's real estate, okay? Business means that you are investing in equity within a particular business. You are putting down money, giving people debt or giving people equity to do a particular business. So for example, somebody wants money to do LPO financing. Somebody wants money to do whatever, or to even buy stocks in that particular person's business, especially in the world of venture capital that we find ourselves today, right? Equity investing is very, very wonderful. It's very, very good. Okay, if you have the kind of cash that you can spend in that form of investment. Okay, so there is real estate, there is business, right? Financial instruments, stocks, bonds, mutual funds, ETFs, all those types of things, financial instruments, commercial papers, all those things that you trade on the floor of the stock exchange, whether it is Nigerian Stock Exchange, Johannesburg Stock Exchange, Moroccan Stock Exchange, whatever it is, right? Okay, financial instruments is also another way of investing. And then the last one are commodities. Commodities, oil, gas, agriculture, gold, silver, all those things. Those things are commodities, right? That are being traded. The question is this: what do you want to invest in? Personally, right, I would rather invest in business or real estate. So for me, I've picked those two. I want to do business. I want to invest in real estate. I don't really like financial instruments, even though, I understand them. I don't really like commodities that much, right? But I do. So I don't own one single crypto, right? I don't own gold coins, even though I might own in the future, right? I don't own silver coins. I don't have agricultural commodities that I buy and trade in. I don't do any of those things, right? Financial instruments, I've got stocks, but I'm not an active stock trader, right? Real estate, I am very interested in, right? If you see, things like art, for example, can be a commodity, for example, or you can put it in an asset class of itself, right? I'm not really a fan of art, okay? All right? It doesn't mean I can't invest in it. If somebody helps me understand it, right, and shows me a way to make money from art, I can invest. In fact, in those days, right, the three biggest things people were investing in were land, art, and gold. Land, art, and gold, right? Because they've always stood the test of time. Okay, so business, real estate, financial instruments, commodities. Okay, which one do you want to do? I will personally encourage every single person to get into real estate in one form or the other. Okay, even if you cannot buy one for yourself, collaborate with people, buy a property, right, and sell. And there are different things you can do in that segment, right? So for example, in real estate, if you're in Africa, if you're in Nigeria, one of the strategies that you can deploy is get in early on certain properties that are being developed, and once it is finished development, right, you can sell it at 40-50% higher than what you invested in buying that property. You can pull money together, get into real estate, buy and sell, right? We don't really have a secondary market in this market, so a lot of what people might do will just be buying and selling real estate, right? Business, right? Do venture funding, right? There are many businesses today, and there are several crowdfunding platforms where you can, with $1,000, you can invest in certain startups. With $5,000, with £5,000, with £1,000, you can invest in startups and give them seed funding for whatever it is that they're doing, or rather pre-seed for whatever it is that they're doing, and then you become, somebody that is on their cap table, and then you can do all of that, right? So that's another viable way, and that's another investment option. Financial instruments, like I said, stocks, bonds, etc. You need to understand these things. What does it mean to short a stock, right? What does it mean to go long on a stock, right? All those types of things are terminologies that you need to understand when it comes to investing, okay? Commodities. Do you like commodities? Do you like trading in commodities? You can make money in any of these asset classes, but you just need to pick out the ones that you make you comfortable, that you can focus on, and that you can make money from. The other day I was talking to a friend and I was asking a question. I said, look, I want to achieve XYZ amount of money in investments over the next 3 years. What can I do? And he said to me flat out, he said, the only asset class that I know that can give you the kind of returns that you're looking for within the next 3 years is real estate. So why am I saying this to you? So I always encourage people to buy real estate, right? Especially residential property, because most people are working from home these days. Commercial properties are not as valuable as they were back in the days. So most people are living, in fact, in some countries, they are converting commercial properties into private properties and things like that. So that's another investment tip. The next one I want to say is understand your risk appetite, right? Are you a low risk person, a medium risk person, or a high risk person? I don't have any problems taking high risk personally. I have absolutely no problems taking high risk, as long as those high risk are calculated, etc. There are people that if they take high risk and it loses, they feel like they are finished. They think that their life is over. All right, for those type of people, stay away from high risk investments, because high risk investment means high returns, right? I'm personally, I really don't mind, right? All right, it's money. You're always going to make it back, right? That's the way. That's my philosophy. That's the way I think. But if you are the kind of person who feels like, look, if you lose this money, your life is finished, everything is over, then probably high risk investments are not the kind of investment that you want to do. Maybe you are a low to medium risk appetite person. right? I have high, high risk appetite, but I try to be calculated in what I invest in. Okay, so if you will be devastated by loss, then maybe you should only do safe investments. For example, I talked about agriculture. Some people were devastated by the loss that they made in agriculture. A friend of mine put money in a rice farm, and floods came and swept out the entire rice farm. But listen, he's still fine. He's still very wealthy. He's still doing it very well. Now, if that farm had worked out well, he would have made a lot of money. He would have made a ton of money. But when it didn't work out well, he moved on to other investments. All right. In fact, this was his second attempt at agriculture that he was failing at. But he is still very, very comfortable, very self-sufficient. All his other investments are making money. All right. So if you're going to invest and multiply money, invest in something that you have risk tolerance for. Miles Monroe said there are two ways, right? You can either put, people say don't put all your eggs in one basket. He said you are right, but you can also put all your eggs in one basket and watch that basket very well. If that basket moves to the left, you move. If it moves to the right, you move as well, right? So I have seen people get rich with different strategies. Right? So, and which is one of the reasons why I don't like telling people this is what you should invest in, this is what you shouldn't invest in. Because in what you don't invest in, some people invested in it and they made money. In what you're invested in, some people invested in it and they lost money. So it's not about that, it's about education at the end of the day. All right. So learn a lot about your investment and your investment philosophy, right? If you are into stocks, understand it very, very well, right? Then understand, are you investing for value or are you investing for cash flow, right? What that means is that there are some investments that when you invest in it, right, it doesn't necessarily give you cash returns immediately, but it continues to increase in value. Many real estate investments are like that, but there are ways that your real estate can give you cash at the same time appreciation in value. It takes education, it takes understanding what exactly it is that you need to do. Above everything else I am saying, this is one thing I want you to take away from today. Get educated. When it comes to financial prosperity, when it comes to being financially free, it is critical that you get educated. Just think about it. This is something you will do for the rest of your life. You don't want to go in ignorant. You don't want to go in blind. Get educated. If you decided to do real estate, get educated. And guess what? Real estate in the UK is different from real estate in Nigeria. It's different from real estate in the US. They may be similar, but there are a lot of differences. So if you are in the UK, learn real estate in the UK. It's different from real estate in Nigeria. If you're in Kenya, learn real estate in Kenya. It's different from real estate in Nigeria. If you are in whatever area, all right, pick where you want to work, pick where you think you can do well, and then go all in. Invest your time, invest your efforts, invest your energy into that investment and ensure that you make the most of it. Hey, listen, I hope it's been helpful for you today. I really do hope that it's been helpful. I hope you can see the pathway and the trajectory towards achieving financial freedom. For just in case you didn't know, let me say this again. It starts with number one, taking financial freedom seriously and educating yourself. Number two, right, working on your income to ensure that you make money. Number three, managing that money to ensure that you are able to save a lot of your money. Number four, investing that money in options and platforms and tools and investment options that give you the maximum returns on your investment. Some of you need to go and do Euro bonds. Some of you need to go and do, government bonds and any of all those other things, right? But you must learn, understand the type of instrument that you're investing in, understand the kind of returns that it will give to you, and then, and only then, do I encourage you to go ahead and invest, right? Remember, you save to invest. You don't just you gather money most times to be able to invest. All right. I hope the series has been helpful for you. You know what I'm going to do next week? I'm going to talk about how to get out of debt. Yeah. Because I know that there are a lot of businesses and a lot of people who are in one form of debt or the other. And I'm going to start out by explaining to you the difference between good debt and bad debt. We're going to talk about that next week. It's going to be really, really awesome. Don't miss it, right? How to get out of debt, especially in your business. All right. I trust that's going to be helpful for you. Thank you so much for joining me once again today. God bless you. I'll see you next time.